We had a massive week in the stock market and a massive rally today on Friday because of the core PCE and a couple of other things. Now suddenly, again, the recession is cancelled and things are back to normal. And this is normally whenever I like to make those videos to try to assess everything. And as you guys know, I have been short-term bullish on the market. I showed you a lot of charts in the last video. So I'm going to revisit all those things that we talked about last week and talk about a few more variables and try to come up with a conclusion if we should be more aggressive or more defensive at the moment, if we should be holding more cash or less cash at the moment, and the likelihood of actually us have had a stock market bottom in October. All right, now this is the headlines that we saw this week, and it said the NASDAQ rose over 20% from December low and entered a new bull market. And this is the same thing they said on the summer rally, I believe. They said it went up 20%. That means it's a new bull market. And we had the same stuff happen in 2008 whenever we had the whole bear stearns thing happen, and after bear stearns, the S&P went up, I believe, 10%. I think the NASDAQ went up more than 20%. People claimed there was a new bull market, but this new bull market was actually based on bad fundamentals, and this is why the new bull market didn't last long. People then woke up to everything that's bad, everything that's happening, and then we reversed and we made a new low. And there could be something pretty close to this that could potentially happen in the future. And this is the charts that I showed you. And I did show you this line, if you remember, from the March 2020 lows. It touched the October lows, and we're still above this line. And I told you in my previous video that as long as we're above this line, we are mostly in a bullish trend. And I don't believe anyone should be max shorting the S&P 500 or holding, like 90% cash or doing crazy things as long as we're above this trend line. This is what I'm watching for. But if we do go below this trend line, meaning a little bit below 3,700, that would give me more conviction to actually see that we're entering a bearish move and a very big change in sentiment. This would lead me to be more short. It would lead me to hold much more cash than I normally have, but I'm not doing that right now. Why? Because we are still above the trend line, and we actually might not even break this trend line. If we touch 3,700 and then we bounce, I mean, that's pretty much a stock market bottom in my personal opinion. But I believe if we ever gonna get back to this line, we will most likely break below it, and this is when I would be interested in making a big, change from actually being short-term bullish to being more short-term bearish. But the S&P did reject this trend line over here, so it will most likely, reverse Monday. But we're gonna find out. I'm not really worried about such short-term moves. But as long as we're above this line that I showed you from the March 2020 lows, the S&P 500 is still in a bullish trend. And the same thing with yields. As long as the 10-year is below this trend line, I believe TLT is going to perform amazingly well this year if inflation does come down, if the Fed does cut rates. But again, this is pretty much a dream scenario for the S&P 500, because what if inflation is more sticky? What if the Fed doesn't cut rate in 2023? The market is pricing in cuts in June. So there's a lot of surprises, and you combine all of those things with a VIX of around 18 VIX. We just had a banking crisis a few weeks ago. We had a bank fail, and now the VIX is at 18. So that would leave me a lot of risk, not to the upside, actually to the downside. If you combine everything we have, from the Fed having hike rates so much, from bad fundamentals, which I'm gonna cover in a little bit, and everything we're having with a VIX of 18, it leaves a lot of room for pretty big drawdowns, 3 to 5% down days potentially on the S&P 500. Whenever you have the VIX being so low, with everything we had from the huge earnings, which are I'm gonna talk about, and the Fed cutting rates, which if it ended up not being true, and the market could get a big surprise if the Fed just holds or even raise a little bit more and doesn't cut in 2023. Now this is the earnings picture, and this is what I've been pretty bearish on, and this is earnings, and this graph says earnings don't survive recessions, and this is the earnings expectations. It's way on the top line of the earnings growth, and this dotted line here is pretty much the trend, and it's way above trend. And in every time we have a recession, like the COVID recession, the dot-com crash, every single recession, this expectations actually go below the trend line. And this hasn't happened yet. We're still way above the trend line. And I don't even think we could make 200 EPS in 2023. I mean, with the slowdown we're having, people are celebrating that inflation is coming down. But if inflation is coming down, it's for good reasons. And those reasons are lower economic growth, which should actually lead to lower earnings. So as inflation is coming down, these earnings estimates, they have to come down. At least 195 to 200 EPS, which if you put in a 15, 16, even 17 multiple, you're still lower than 3,400 on the S&P. So in terms of a valuation perspective, you combine it with such low volatility, with, yields trading, like shit coins pretty much, and everything we're having, it leads to a lot of risks to the downside. In terms of upside on the VIX, downside on the S&P, this is what I'm basically seeing, and I've been pretty cautious, especially Friday, after this very big rally that we had, because there's a lot of things we can talk about that can surprise the S&P and, crash it to the downside. I don't see many catalysts for the upside. We priced in lower inflation, we priced in rate cuts, we priced in the best earnings we could possibly have in a recession. So again, I'm not seeing the catalyst for upside, and I'm seeing many more catalysts for a near-term reversal, on the S&P 500, and you combine all of those things other than the VIX trading at 18 and earnings being high, we still have the dollar index holding above its support line of 101. And I believe this is telling us something. Whenever we have, the dollar actually holding up, if the dollar was below 101, below support, it was trading at 98, 97, we can say this is a new bull market. But I believe there's still a chance for us actually having a reversal as long as the dollar is above 101, which is, again, if you combine all those things together, you have a lot of risks that are skewed to the downside on the S&P 500. And the final thing I want to talk about today, which has been all over Twitter, is the whole drama around, the dollar being weak, Russia and China aligning, and then it's just, losing its reserve currency. It's like it's going to happen tomorrow. Well, I would like to remind investors and people in general that there's still a lot of global debt denominated in dollars, over 65 trillion of hidden debt. I believe it's around 11 trillion of debt that we actually know about. So in total, around 70 to 75 trillion dollars of US debt. And China and Russia, whatever they like it or not, and other nations, they have to get dollars to actually pay this debt. So the dollar is not going away anytime soon. There's nothing that can be the world reserve currency, not the yuan, not gold anytime soon. It could be, but I don't think they're going to do it. Not Bitcoin. Of course, it's not Bitcoin, because central banks like controlling their own thing, and they cannot control gold and Bitcoin, which is why they got rid of them anyway. So I'm not seeing any kind of things that could challenge the dollar or being the world reserve currency. This could happen maybe, 10, 20 years from now, but it's not going to happen tomorrow like people are saying on Twitter. So I would just decide to end this video with this message, as a lot of you are just worried and are all into this drama, while there's so much debt still denominated in dollar, and these countries, whether they like it or not, they have to get dollars to actually be able to pay, this debt. So this was my review for this week. I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.